Right. Here you can see the course outline. Right. Financial reporting. So these are the main topic and the weight. The regulatory framework, governance, ethics, financial reporting, that is for 10%. Then 40% Sri Lanka accounting standard. So there is a list of accounting standard covered in the syllabus. And some of these standards will link with your continuous assessment, right? Group presentation and assignment, because we have a relatively large content, and some small standard will be covering through the CA, continuous assessment part. And the main standard we'll discuss in the lecture. We have 10 sessions, 11 sessions, like that. So you have 12 weeks, no? Yeah, because 4 hours, 45 hours to be covered, right? So, right. So accounting standard 40%. Then the preparation of financial statement 30%. When it's come to preparation of financial statement, again there are some accounting standard, right? You can't do a financial statement without standard. So these, in addition to the specific standard, separately covered. Under preparation of financial statements, we will be covering some standard. This includes consolidated financial statement also. So some standard related to consolidation and normal company published financial statement, basic case 1, 8, 10, right? Those standard also covered. Then the fourth aspect, analysis and interpretation of financial statement, right? Mainly using accounting ratios. So normally our discussion, we start with the standards. Now these are the standards in the syllabus. Financial instrument, leases, revenue, income tax, employee benefit, borrowing cost, related party, impairment, intangible, investment property, SLFRS for statement, right? We have altogether 39 students, right? Physical 29 and 33. 33. Right. So we divided form about 5-member groups, 5-6-member groups. Then have about 6 groups approximately, right? 6 groups. So the standard we can assign for the group assignment. Borrowing cost, related party, impairment, intangible asset, investment property, and SLFR source. So I'll take them from the I will take them to relate to the group assignment. But the standard adjustment will be tested with company financial statement, preparation of financial statement. Right. So we are not going to discuss the standards like we discussed these standards in detail here, but that knowledge will increase the preparation of financial statement, and you will be presenting these in your group presentation. Right. Then we have the preparation of financial statement of a limited liability company. So when it comes to published financial statement and financial statement of limited liability company, and it has consolidated financial statement involving one or two subsidiary, associate, joint venture. That means we will be covering, in addition to this given list of standard, based on preparation of financial statement, we need to use the knowledge of LKS 1, presentation of financial statement. Then LKS 8, accounting policies. Changes in accounting estimate. And errors. Because when you prepare the financial statement, you should know accounting policy changes, estimate changes, those things. LKS 10, just after reporting periods. Those who join online, I hope you can clearly hear me, right? Okay. Then you have consolidated financial statement. There we are using broadly the business combination standard. Then consolidated financial statement is SLFRS 10. And LKS 28, accounting for associate. SLFRS 11, joint arrangement. Right, so we are not going to discuss the standard separately. But when it comes to preparation of financial statement, we are using the guideline of these standards. So in addition to the standard listed in the course outline, so we are using the guideline of these standards when it comes to preparation of financial statement. Right. So it's heavily standard-based course, right? Except that 20% financial statement analysis part. Right. So mainly it has here 40% weight for accounting standard, 30% for preparation of financial statement, that also in line with accounting standard. Basically 70% standard base. Only difference is this 30% will be given a question preparation of financial statement directly. They are applying the standard. All adjustments are standard basis. Right. Then remaining 40% separate questions, the standard. Right. So basically 70% of the course is standard. For those who join later, you can see the course outline. These are the standard. Out of the standard, financial instrument, leasing, revenue, income tax and employee benefit, we are going to discuss in the lecture, right, during the lecture, separate standard. The borrowing cost, related party, impairment, intangible, investment property, SLFRS for SME will be covered mainly that is allocated for your group assignment. Group assignment has group presentation and the report. So each group will be allocated one of these standards. And in addition to that, borrowing cost, impairment, intangible assets, investment property, these things will be related with the company financial statement. When you prepare the company financial statement, you will be tested some adjustment from these standards. Right? So that knowledge will be there. So we are not going to discuss the standard directly, but with the company financial statement adjustment, you will expose to this. Right. Then we discuss the company financial statement, including consolidation. So where you find these standard, application of these standard, when you prepare financial statement of company, you need in case 1, 8, and 10. In addition to the other standard listed. Then for the consolidated financial statement, including associate and joint venture, we have these, right? So this is what we are going to cover in this course unit, relatively large content, right? So I will start the discussion with the SLFRS 9 financial instrument. So the lecture material uploaded to the LMS. Along with the relevant standard, right? Lecture material plus the standard is relevant accounting standard applicable for financial instruments are there, right? So I am Rangajeev Herath. I'm a senior lecturer at University Department of Accounting. So that normally I'm doing few subjects in this SAP campus. Financial reporting, one subject. Normally I'm the one doing financial reporting for the exemption batches. Financial reporting we have Chris Romano and myself. 3 of us are normally covering financial reporting subjects for different batches. Right? So sometimes some weekday batches and some exemption batches. Normally I'm taking FR. So your batch I'm taking FR. And in the case sometimes in exemption batch I may take even advanced management accounting also. Right? Then if you the exception batch you can take the general degree. Normal students we have specialization there. We have the final year advanced financial reporting that is normally doing by myself because specialization we don't have several batches. We have only one batch. Right? Others continuously simultaneously there are so many batches, so we have so many parts something. So there are 3 lecturers. But when it's the final year, it is normally one batch for a year. 4th year specialization. So they are taking the advanced financial reporting. And normal general degree, we have 2nd year business process control and audit. These are the subjects that I am covering here. Right. So when it comes to accounting standards, any accounting standard, these standard and what you find here, all these standards, when you take accounting standard provides guidance on 4 aspects. Recognition, measurement, presentation, and disclosure. recognition, measurement, presentation, disclosures of financial statement elements. All the accounting standards provide guideline on this. Recognition, measurement, presentation, and disclosure of elements of financials. What are the elements? Financial statement element. The 5 elements. Yes. Financial statement elements. Come on. Just speak it louder. Financial statement elements. All the financial statement provide information about these elements, basically. Financial statement will go through the elements. One of the elements. We have mainly statement of profit or loss, statement of financial position, cash flow statement, statement of changes in liquidity. These are not elements, these are type of financial statement or components. All these financial statements provide information about 5 elements. Yes, that is asset liability, equity, income, expenses. Right? So financial reporting, financial accounting, outcome is the financial statement. Financial provide information about assets, liabilities, equity, income, expenses. So the accounting standard provide guidance on how to recognize. I'll just take some very simple standard. You are familiar with PPE, LK16. LK16 provide guidance on how to recognize property, plant, and equipment, the financial statement. How to measure property, plant, and equipment in financial statements, measurement at recognition, cost. Measurement subsequent recognition, cost model or evaluation. Right? How do we present the property, plant, and equipment in the financial statement? Statement of financial position, you have to present it under the non-current assets. Right? Then, what are the disclosures that we should make in relation to property, plant, and equipment? Normally, we provide the PB note. They are the opening balance, addition, revaluation, disposal, closing balance. Then for the accumulated depreciation also. Right? Then you have to provide the useful life of assets, classes of assets. Right? All these guidelines are provided by LKS 16. Normally, when you take an accounting standard, standard provide guidance of these 4 areas. Right? When it comes to financial instrument is a very complex area, very broad. As a result, one standard, it is very difficult to have one standard to cover all these aspects. So there are 3 accounting standards to cover: recognition, measurement, presentation, and disclosure. Right? Which is quite unusual, and this is the only area we find 3 standards to cover one particular area. Now, when you take inventory standard, recognition, measurement, presentation, disclosure of inventory covered by one standard. Right? When you take intangible asset standard, recognition, measurement, presentation, disclosure of intangible asset covered by LKS 38. But when it comes to financial instrument, because of the broad nature of the financial instrument, we have 3 standards. Main standard is SLFRS 9, which mainly address the recognition and measurement of financial instrument. We have LKS 32 financial instrument presentation. We have separate standard since there are so many disclosures. SLFRS 7 about financial instrument disclosure. Right? So we are not going to discuss in detail each and every standard, but we are going to give you the overall understanding of the financial instrument, right? Otherwise, if you are going to cover the financial instrument in detail, we need about 5-6 lectures, right, to cover only financial instrument, right? But according to the syllabus content, we can't allocate that much of time, right? So we can take, because we have so many standards, and the financial statement preparation, company financial statement plus consolidation, right? That also including associate joint venture, and separately we have fund analysis also, right? So we are covering only the core aspect of financial instrument. That is important when you work in an organization, right? So to understand financial statement, the accounting treatment for financial instruments. So you can use this knowledge. But there are some minor areas that we are not covering in this course, as we have to cover so many content, right? Understand, right? So what is financial instrument? The financial instrument is a contract that raise both financial assets. The financial instrument create financial asset to one entity and financial liability or equity instrument for the entity. So it's a contract. The contract, there are two parties. Any contract, you need two parties. So in the financial instrument, there are two parties. One party who issue the instrument, other party who hold the instrument, or the investor. Then this contract create financial asset to one party. Normally investor financial asset. Now when you take ordinary shares, ordinary share is a financial instrument. When company issue ordinary share, there are some investors who invest in those ordinary shares. Those investors, it is a financial asset. An issuer, the company, it is equity instrument. Preference shares, based on the features, preference share can be classified either equity or financial liability. So from the issuer's perspective, it can be financial liability. Now, if you take redeemable preference share issue with the condition company agreed to redeem, settle it after 5 years, 10 years, something like that. So then it's a financial liability. The issuer financial liability, investor, holder of the instrument, investment in preference shares, financials. Debenture. Company issue debenture, right? Bonds. So issuer financial liability. The other party financial asset. Even when company obtain a loan from a bank perspective, it is loan receivable financial asset. Business, the borrower loan payable. That is financial liability. Even a credit sales transaction create a financial instrument, that contract. One party create receivable financial asset, other party create payable financial liability. So fixed deposit, you can have fixed deposit in the bank. It create financial asset to the investor, customer, financial liability for the bank. So any contract that create financial asset to one party, financial liability or equity instrument to other party is a financial instrument. Right? So up to 1 to 6 are basic financial instrument. 7, 8, 9 are special type of financial instrument that we call derivatives. Right? We'll discuss them later. Right? So I will initially focus on basic financial instrument. They are also our main focus on equity instrument, ordinary shares. and debt instrument debenture. Right. Those two. So when you cover these two, so you can cover even the balance also. Right. Because the ordinary shares different. This is the equity instrument. If reference shares come under equity instrument, the same way you can think. And you know the debenture, like loan receivable, trade receivable also much similar and much simple than equity. Right. So what is financial asset? A financial instrument create financial asset to one entity, financial liability or equity instruments to other entity. So we should know what is financial asset. Financial asset, cash is a financial asset. Right? Cash itself, financial asset. Equity instrument of another entity. When company invest in ordinary shares, that is equity instrument of another entity. That is your financial asset. Or you invest in debenture, then you have contractual right to receive cash. You have trade receivable. You make credit sales. You have trade receivable. So you have contractual right to receive cash. You have invested in a fixed deposit in the bank. So you have a contractual right to receive that cash. You invested 1 million rupee in 1 year fixed deposit. So you have a contractual right to receive 1 million after 1 year. That's financial asset. So we will look at this Roman number 2. I will explain its couple derivative. So if you are going to recognize any instrument, any financial asset, the entity should become part of the contractual provision. Should become part of that contract. Normally, when you invest in ordinary shares from primary market, that means company issue shares, your company invest in those shares. You can recognize the investment in ordinary shares when you become part of that contract. Normally, company issue shares they call money with application. Then they allot shares. The allotment, vibhajane කියලා කියනවා. So when the company allot the shares, investor become part of the contract. So you can recognize the investment in ordinary shares. Right. The secondary market from Colombo Stock Exchange, if you are investing in shares, right? When the transaction is completed, right? So then that is recorded in the system. You place the order, the party you are asking, say 1,000 shares at 250, right? The party agreed with that. So then you can recognize the investment. The important thing is the recognition, the measurement. How do we measure financial asset? Financial assets measurement. Based on the measurement, we can identify financial assets under 3 categories. But irrespective of these 3 categories, all financial assets are measured initially at fair value. Financial asset at recognition measured at fair value. You invest in ordinary shares of your Hills only, right through Colombo Stock Exchange. So the amount you invest is the value. So this is likely to be the purchase consideration, right? Not like other assets. Financial assets are normally traded at fair value. Financial asset එකක් trade වෙන්නේ fair value එකට තමයි. It's a purchase consideration එකම තමයි fair value එක වෙන්නේ. Like you invest in ordinary shares, you invest in debentures, right? You invest in a fixed deposit. So that's fair value is the purchase consideration. It is easy. When you are investing in financial asset, there may be transaction cost incurred by the investor. Like when you acquire ordinary shares through Colombo Stock Exchange, you have to pay the brokerage fee. Right? This is transaction cost. How to treat with transaction cost will vary based on type of financial asset. Financial asset we classify into 3 categories. Out of them, financial asset classified as financial asset at fair value through P&L. Except this classification, all other 2 classifications, transaction cost is added to the initial measure. That means transaction cost capitalized. You invest rupees 1 million in ordinary shares. That you credit cash, debit financial asset, investment in ordinary share. And if you invest 50,000 transaction cost, except financial asset at fair value. Financial asset at fair value through profit or loss. Then other cases, that 50,000 also you have to debit to the financial asset. If investment classified as financial asset at fair value through profit or loss, then the transaction cost recognized in P&L. Samani financial instrument, financial asset අපි කතා කරා financial instruments වල පාර්ශ්ව දෙකක් ඉන්නවා. එක පාර්ශ්වයකට financial asset එකක් වෙනවා. අනිත් පාර්ශ්වයට financial asset liability හරි equity instrument. Financial asset එක measure කරද්දී initially fair value. Any transaction cost you can add to the fair value and capitalize. Except the financial asset at fair value through profit or loss. They are the transaction costs charged to P&L asset. The subsequent measurement එකමත් තමයි මේ classification තුනේ. Financial asset at fair value through profit or loss. Financial asset at fair value through other comprehensive income. Financial asset at amortized cost. වර්ග තුනක්. Right? Financial asset at fair value through P&L, financial asset at fair value through OCI, financial asset at amortized cost. When you invest in equity instrument, ordinary shares or non-redeemable preference shares classified as equity instrument, equity instrument will be classified either financial asset at fair value through profit or loss or financial asset at fair value through OCI. Equity instruments are not classified as under amortized cost. The amortized cost is equity instrument. So initially we are going to discuss about investment in ordinary shares as a financial asset and equity instrument. So it will be either fair value through P&L or fair value through OCI. Right. So here we have an activity, financial asset at fair value through P&L. Platinum PLC invested 10,000 ordinary shares of Gold PLC on 1st October 2021 at rupees 200 per share. Platinum incurred transaction cost of 50,000 in relation to this transaction. Company held these shares for trading purpose. Normally, people invest in ordinary shares. Stock exchange, if you take through Colombo Stock Exchange, you are buying shares of another company. That is for trading purpose. When the price goes up, you plan to sell and get a capital gain. So the normal classification is investment in ordinary shares we classified as fair value through PN. And if it is mentioned that it is held for trading purpose, that is obvious, it is fair value through PNL financial asset. Right? The සාමාන්‍ය තත්ත්වය තමයි default treatment එක තමයි investment in ordinary shares classified as financial asset at fair value through PN. The market price of the share you purchase for 200, end of the year 230. The market price is the fair value. So as the classification name suggests, financial asset at fair value through P&L. So you initially measured at fair value. Now transaction cost is not capitalized because fair value through P&L, financial asset, transaction cost is charged to P&L asset. Then the increase in the fair value or decrease in fair value, market price, resulting gain and losses. Here fair value through P&L. So any such gain and loss recognized in profit or loss. That is the classification. Right. So I will take this activity. So we can open T account, financial asset at fair value through P&L. So this is the can mention this is ordinary share of gold. Right. Here you see the account financial asset at fair value through P&L. Right, financial asset at fair value through P&L. This is ordinary share of gold. We need to have the account. We can prepare it in ₹1,000. And you are asked to provide financial statement extract, statement of profit or loss and OCI for year ending 31st March 2022, and statement of financial position 31st March 2022. Right. This is quite straightforward one. Invested 10,000 ordinary shares at 200 each. So when you invest 10,000 ordinary shares at 200 each, 10 into 200 in rupees 1,000, 2,000. Credit cash, debit financial asset at fair value through P&L account. Credit cash, debit financial asset at fair value through P&L. This is the investment we made in ordinary shares. Right? FA at FBPTPL. Financial assets at fair value through P&L. This is ordinary shares of gold. Then the transaction cost incurred 50,000. Now the transaction cost you cannot capitalize because it is financial asset at fair value through P&L. This classification we don't capitalize. All other classification transaction cost we can add to the asset. Right? So here the transaction cost charged to P&L as other expense. So I can show it, take it into P&L. Transaction cost. Under other expenses, we can show it. Transaction cost, 50,000. Then end of the year, we are still holding these investment, these shares. Now the company held these shares for trading purpose. Market price 230. 31st March 2022, the market price was 230. So closing balance carried forward, you can value at 10 into 230, 2,300. So there's an increase. The market price, value of shares. So this resulting in a fair value gain. The gain, as the name suggests, this is financial asset at fair value through P&L. So this gain charged to P&L. You can record it under other income. And this balance carried forward, you can record as a current asset because this is investment held for trading purpose. So you will not keep it very long time. So you can record this under current asset, financial asset at fair value through P&L. So fair value through P&L investment are normally presented under the current assets. Okay, so we can move to the activity 2, financial asset at fair value through OCI. So Platinum PLC invested 15,000 ordinary shares of Silver PLC on 1st October 2021 at 100 per share. Platinum incurred transaction cost of 40,000 in relation to this transaction. Company does not hold these shares for trading purpose and decided to recognize gain or loss from fair value to OCI. So if it is not held for trading, then company has the option to classify decide this investment as fair value through OCI. Normally, this is applicable. You invest in shares, you have a long-term intention to take more and more shares, right? To take this as an associate or get the control, right? You initially invest 1% of shares. That is, it's a financial asset. But you are not held it for trading purpose, right? You want to keep it as a long-term investment. So then you can classify the investment as financial asset at fair value through OCI. When you classify it at fair value through OCI, transaction cost can capitalize. Subsequently measured at fair value, resulting gain or loss recognizing other comprehensive income. That's all given. So we can move to this activity. We can have the T account and financial statement extracts for activity 2. So we can name the account financial asset at fair value through OCI. This is ordinary shares of Silver. Then statement of profit or loss. We have to show gain or loss in other comprehensive income, right? Not in other income, because this is fair value through PA, fair value through OCI. And transaction cost also added to the investment. So we need not to show other expenses, right? Under statement of profit or loss and OCI, we can show this other components of other comprehensive income. Then statement of financial position, we have to record this investment as non-current asset. And any gain or loss recognized in other comprehensive income, we have to accumulate in a separate reserve. You know that revaluation surplus we record under other comprehensive income and accumulate in revaluation reserve. Similarly, here we have a gain on fair value of financial asset we recognize in other comprehensive income. Anything recorded in other comprehensive income, you have to accumulate in a separate reserve. So that reserve is named as fair value through OCI reserve. You record it as under equity. So the cost is 15,000 shares at 100. So investment cash in rupees 1,000, 15 into 100, 1,500. Cash credit, financial asset at fair value through OCI debit. Transaction cost 40,000. That also credit cash and debit financial asset now. Right. So earlier fair value through P&L, transaction cost charged to P&L. But fair value through OCI classification, transaction cost is capitalized. Now, end of the year, market price of these shares increased to 130. So carried forward balance is 1,950. 15 into 130. Now we can balance this. We have a gain. Now this gain recognized in other comprehensive income. Gain එක අපි ගෙනියනවා other comprehensive income. So now you can show the closing balance under financial asset closing balance under non-current asset. And what you recognize in other comprehensive income accumulated as a reserve. Like revaluation reserve. You can have the fair value through OCI reserve. Okay, this is clear. When you invest in ordinary shares, it can, if it is held for trading purpose, it is classified as fair value through P&L. Then, even though if it is not held for trading purpose, still it can classify it as fair value through P&L. Right? So, if the because by default, normally investment in ordinary shares come under fair value through P&L. If company intend to classify it as fair value through OCI, it should be clearly decided. So in a question, it should be clearly given. When you invest in ordinary shares, it is not held for trading purpose. And company decide to recognize gain and losses in OCI. Once you classified it as fair value through OCI, you can't reverse it. Right? Earlier, the standard allowed to interchange from fair value through P&L, fair value through OCI. Then companies misuse it. You initially classify it as fair value through OCI because then gain or loss charged to OCI. But when you recognize that the share prices are increasing, then you reclassify it as fair value through P&L, so you can hit that to the P&L. Now that is not possible. Normally, ordinary share investment you classify as fair value through P&L. Right? If it is trading purpose, no alternative, it should be fair value through P&L. Right? Trading purpose now fair value through P&L. Trading purpose නැති වුණත් fair value through P&L කියලා අපිට classify කරන්න පුළුවන්. Company can designated any investment in ordinary shares as fair value through P&L. However, if the investment in ordinary shares not held for trading purpose, then company has the option to classify it as fair value through OCI. If you classify it as fair value through OCI, transaction cost is added and resulting gain or loss recognized in other comprehensive income. Right? Right. We had two activities, one fair value through P&L, one fair value through OCI. Now you can attempt activity 3, where you have the both. Can you just attempt activity 3? Third activity get number.
Basically, එකක් ඔෆ් කරනවා ජෙනරේටර් දුවන්නේ රෝටර් මන්දියේ. ඔක ආවොත් වෙන මොකක්ද කතා කරන්නේ. ඊට පස්සේ ඒක ඔෆ් කරනද වෙන ඉතින් ඔබ තියෙන
Right? Now this one, you have two investment. Alpha entered into following contract. During the year, invested 10,000 ordinary shares, 250. Transaction cost 50,000. Market price of the share 280. So initially 250, which has increased to 280. And held these shares for trading purpose. When you take held the shares for trading purpose, that means this is fair value through P&L. Then 20,000 ordinary shares of beta, 150 per share. Transaction cost 40,000. Market price end of the year 175. Alpha held this investment portfolio for the long term and company decided to recognize gain and loss on fair value change in OCI. So it is clearly given fair value change, gain and losses in OCI. That should be financial fair value through OCI. So we can have two investment here. Activity 3. We have two assets. One is financial asset at fair value through P&L, that is ordinary shares of Sigma. Other one, financial asset at fair value through OCI, ordinary share of B. First, we can have the T accounts. Now, Sigma initially 10,000 shares at 250. Look at debit cash, credit cash, debit, financial asset at fair value through P&L, 250 to 10, 2,500 in rupees 1,000. The transaction cost we have to charge to P&L here. This 50 you can record under other expenses. At the end of the year, the share price has increased to 280. Now carrying forward balance 2,800. Investment 2,500. Closing balance 10,000 into 280, 2,800, 2.8 million. So we have a gain 300. that you can record in other income, right? Gain on fair value change. Then the second investment, 20,000 shares at 150. And it was classified as fair value through OCI. Because company decided to recognize any gain or loss in other comprehensive incomes clearly mentioned. So when the financial asset is classified at fair value through OCI, transaction cost is added to the investment. At the year end, market price of these shares become 175. 175 into 23,500 the closing price. Now we have a resulting gain that is recognized in other comprehensive income. You can record this in other comprehensive income. And we can show now financial asset at fair value through OCI, 3,500 is a non-current asset. Fair value through P&L, financial asset, current asset. This other comprehensive income accumulated in OCI reserve. Fair value through OCI reserve. Right? Is that clear? This is a very basic investment in ordinary shares. So when you invest in ordinary shares, it's a financial asset from the investor's perspective. Ordinary share investment can be classified either fair value through P&L or fair value through OCI. Right? If the question doesn't give anything, just investment in ordinary shares, by default it is fair value through P&L. සාමාන්‍යයෙන් අපි ordinary share වල invest කරන්නේ trading top. මුකුත්ම නොකියුවත් fair value through P&L. If it is mentioned for trading purpose, then you cannot classify it as fair value through OCI. It should definitely fair value through P&L. If the investment held for trading purpose. Even though investment not held for trading purpose, still we can classify it as fair value through P&L. And it is if it is to be classified as fair value through OCI, it should be clearly mentioned it is not held for trading purpose and company decided to recognize gain or loss in OCI. Right now, up to this, all these included in all these three activities we had, the fair value increase resulting in a gain. So gain recorded in either other income or other comprehensive income. If the market price decreased, then it could be a loss. A loss. So then loss can record under other expenses or other comprehensive income minus. If it is fair value through OCI investment, if the fair value decrease, the loss you can debit to OCI. So OCI we can show minus. So we have the activity 4. Next activity. Very similar to the previous one, activity 4. Can you prepare the ledger account and the financial statement extra? You understood what we discussed up to this point, you will be able to work out this. Okay. Now 10,000 shares invested 250. Similar activity like the previous one. Transaction cost 50,000. Only difference now market price from 250 to reduced to 210. It's a loss. Then 20,000 shares 150. Transaction cost 40,000. Now 150 reduced to 125. And this investment portfolio helps for the long term and compare decide to recognize gain analysis in OCL. Now here, activity 4. Now initially, cost of investment 10 into 252,500. Cash credit, financial asset payable through P&L debit. End of the year carried forward balance 210. Now debit side is more. The difference is a loss. Loss you charge to P&L 400. The loss. Other expenses we get record. An investment in Jupiter, $200 into 150, $3,000. And the transaction cost 40 we can capitalize because it is fair value through OCI, transaction cost capitalized. Now the closing balance, 20,000 into 125, 2,500. So debit side more. So we have a loss. Now that loss charge to OCI. Then the transaction cost of the fair value through P&L investment, we can charge to P&L 50. Then the transaction cost take a P&L charge. And finally, the financial asset. Fair value through OCI non-current asset. Fair value through P&L. Current asset. And other comprehensive income accumulated in equity. Equity can be negative. Right? If the company having accumulated loss, retained earning can be negative. Similarly, equity can be negative. Right? Here we have a loss. It's a negative. Equity අනිවාර්යෙන් සාමාන්‍ය equity positive balance එකක් තමයි. හැබැයි reserve negative reserve තියෙන්න පුළුවන්. Here we discuss how do we account for investment in ordinary shares. Any question up to this point? So we are in the discussion of investment in financial asset, in equity instrument, ordinary share investment. So two classification, fair value through P&L, fair value through OCI. Right? Then the third classification, financial asset at amortized cost. Now we have three classification. Financial asset fair value through P&L, fair value through OCI, amortized. The amortized cost applicable for the debt instrument, like debenture. Right? And when you invest in debentures, normally your intention is to keep it till maturity. Normally, people invest in debentures to receive interest income and keep it till maturity, long-term investment. Then these investments are classified as amortized cost. Right? So we can understand it using this activity. Saturn invested in rupees 5 million in rupees 1,000, 10% debentures. Investment value is rupees 5 million. Rupees 1,000 means that is the face value of one debenture. 10% is the interest rate at which the issuer of debenture pay interest. Samaning rupees 1,000, 10% debenture can make it up, coupon rate. Right? You may learn this in FM also, right? Corporate finance. Financial management courses. Then interest is payable 31st March each year. Debenture redeemed at a premium of 337,440. That means even though we invest 5 million, then after 5, right, at the time of redemption, we are going to receive this 337,000 on 31st March 2023. Investment made in 19. So it's a 3-year debenture. After 3 years, at the redemption, we will receiving 5,337,440. Why the issuer pay more? Because what they pay as interest is less than our expected rate of return. As an investor, we expect more return, but they pay only 10%. To compensate that, at the redemption, they pay premium. Accordingly, the effective interest rate is 12%. The effective interest rate guarantee in the premium considered. Right. Company intend to collect the contractual cash flows solely repayment of interest and capital. Therefore, choose to record the financial asset at amortized cost. Because you can invest in debentures if the well-established debenture secondary market there, the Lanka, right? Like share market, other countries having the debenture market. So you can invest in debentures for trading purposes. Then it is measured at fair value through PL. Same as investment in ordinary share, right? So debenture investment also can be classified as fair value through PL. In that case, you initially measure fair value, subsequent measure fair value. But most of the cases, when you invest in debentures, you want to keep this investment till the maturity. So then, that is what it mentioned. The contractual, the company intend to collect the contractual cash flows. That the repayment, the payment, interest, and the capital. Right? Payment of interest and repayment of capital. So we are going to measure it at amortized cost. Now we can prepare this account for 3-year period. Make up it to 3-year period. So I prepare the account with more space. So to show it for a 3-year period. Right. Here you can see activity 5. So we need to prepare this account. Financial asset at amortized cost rupees 1,000, 10% debentures. මම මේක ටිකක් 5 million තියෙනවා මේක rupees වලින් හදනවා right මේක අර round up කරන්න නැතුව because we have some values when you calculate the amortized cost right. So statement of profit or loss and OCI for year ending 31st March 2021 22 3 years. Right. Now this activity says that you invested 5 million rupees. Saturn invested 5 million rupees. So you can record this investment 5 million. Cash 5 million. Then under amortized cost method, what we do, we have to recognize interest expense at effective interest rate. If there were transaction cost, that should be added, right? Because only fair value through P&L investment transaction cost charged to P&L. Fair value through OCI and amortized cost transaction cost should be added, right? So this activity you are not given transaction cost, right? Because I just want to first emphasize the amortized cost method, right? Then under amortized cost method, when the interest received, the interest paid by the issuer of debenture, 10% of the 5 million. So 10% of 5 million, when you receive interest received debit cash, credit this financial asset account. We don't take it as interest income. The interest received debit cash, credit financial asset account. Interest income is calculated 12% effective interest rate applied to this opening balance. So interest income is recognized, but we charge to P&L is 600. That is 12% of 500,000. 5 million. So the first year interest income is recognized as 600,000. Then you balance this account. This carried forward balance, this is called amortized cost. It's not the 5 million we invested. 5 million increased by 600,000, decreased by 500,000. So 5.1 million, this is the amortized cost. So this debenture will be redeemed in 3 years. So end of the first year, we have 2 years to go. So we can record this 5.1 million as a non-current asset. So this become opening balance of the next year. Next year also we receive interest income, interest by cash under coupon interest rate, which is 500,000. එවැනි අවුරුද්දේ ලක්ෂ 5ක් හම්බ වෙනවා. 10% of 5.1. That you debit cash and credit interest received. Then the interest income recognized based on effective interest rate. That effective interest rate is calculated based on opening balance into 12%. Not the 5 million. පළවෙනි අවුරුද්දේ 5 million තිබුණා. ඒක 12%. දෙවෙනි අවුරුද්දේ පටන් ගන්නකොට balance එක 5.1 million. So effective interest rate always applicable beginning of the year balance into effective interest rate 12%. But the issuer of debenture, we have invested 5 million, they agree to pay 10% coupon interest. So that cost change, that is 5 million into 10%, 500. But interest income we recognize opening balance into 12% effective interest rate. So that the balance carried forward carried forward balance here. 5,212,000, that is the amortized cost. End of the year 2, the amortized cost is 5,212,000. Now this debenture is going to mature in 3 years. So we will receive this end of the next year. So you have to classify it as a current asset. Make a 5-year debenture එකක් වුණා නම් තව අවුරුදු 3ක් විතර තියෙනවා. Now it is only 1 more year to go. So now you can classify it as a current asset because you are going to receive it in the next year. Then classify it as a current. Now third year, the opening balance, we have 5,212,000. Third year we receive interest 500,000. Now third year interest income 5,212,000 into 12%, which is 625,440. So when you balance this, you get the closing balance. But now you don't carry forward this because now we will receive this by cash, right? It's that redemption. තුන්වෙනි අවුරුද්දේ ඉවර වෙනකොට balance එකක් නැහැ. So second year interest income we can take this. Third year interest income. But end of the third year, there is no financial asset because we have get the full amount. That's it. When we value back 5.1 million, 5,212,000, 5,337,440. You are given in the original question, it is redeemed at 337,440. Right? That has calculated based on the effective interest rate. Right, so you can have a short break and we'll continue the discussion after the break. 10:15 will start at 10:30.
Excuse me, sir. We cannot hear you, sir. I think your mic is off or something.
Now can you hear?
Okay, sir. Now can.
Right. So when it comes to the financial assets, the definition of financial assets, we discussed equity instrument of another entity financial asset, that is investment in ordinary shares, or contractual right to receive cash, financial asset. Right? That is when you invest in debenture, when you have trade receivable, when you have invested in fixed deposit, when you have granted a loan from the bank point of view, you have a contractual right to receive cash, financial asset. So the financial liability is the opposite. Contractual obligation to deliver cash. So when the company issue debenture, it's a financial liability. So issuer's point of view also, the financial liability we can divide into two categories: financial liabilities at fair value through P&L, financial liabilities at amortized cost. So most of the financial liabilities are held at amortized cost. Make them very poor thing. Rarely if the financial liability held for trading purpose, then you can take it as fair value through P&L. Right? So the financial liability amortized cost is very same pattern that we discussed in the amortized cost financial asset. But here now it is the financial liability. If the company issue debenture, then the financial liability at amortized cost equal fair value at recognition. Right? You issue debenture, the debenture issue කරන වෙලාවේ fair value එකක් තියෙනවා. Right? Then when you are issuing debenture, you receive cash. You debit cash, credit debenture account, financial liability account. Issuer incur transaction cost. Right? When you are issuing debenture, there may be kind of legal fee or some kind of transaction cost, issuer's issuing cost. That we credit cash and debit financial liability. So that will be deducted from financial liability. The financial asset එකේදී නම් අපි invest කරනවා. ඒකත් cash outflow එකක්. Transaction cost එකත් cash outflow. දෙකම cash credit වෙලා financial asset එක debit කරනවා. Except for the fair value through P&L financial asset. Financial liability, you issue debenture, you receive cash. So cash debit, financial liability credit. But the transaction cost, the cash you incur. Cash credit, financial liability debit. Over the initial measurement value again. This is the value at initial measure. Then you are recognizing the interest expense. Interest expense at effective rate. Effective rate එකට interest expense එක අඳුර ගන්න. And now you are the issuer. So you pay interest. Interest paid at coupon rate. That amount you deduct. The financial liability account එකට credit වෙනවා interest expense. Interest expense at effective interest rate, P&L debit, financial liability credit. And when you pay periodic interest as the issuer of the debenture, cash credit, financial liability. Right. Exam එකේ සමහර වෙලාවට වරද්ද ගන්නවා financial asset liability එක හරියට කියවන්නේ. right. බලන්න ඕන අපි issue කරපු පැත්තෙන්ද දීලා තියෙන debenture investor පැත්තේ. debenture issue එක දුන්නාම financial asset එක account එක හදලා සම්මතයි. If you are the issuer, then you are receiving cash. You issue debenture. So initially cash debit, financial liability credit. Transaction cost, cash credit, financial liability debit. You did that. Now you pay interest. The interest paid, cash credit, financial liability debit. So you did that. Your interest expense calculate based on effective interest rate, P&L debit, financial liability. Right. So that is how to account for financial liability. This is the financial liability at amortization. Correct. Okay. So I just want to attempt this exercise by yourself. Right? Then financial liability got see. Make that number 7 window. The numbering area got you right. Make a 6, let me make a 7, right? Take all other. Right. Make a number 7. Gold issue 100,000. 100,000 ke number of debenture. Rupees 1,000, 12% debenture. So what make a 100,000 into 1,000 kilohammer. Make 100 million. Right? Make one number rupees 1,000 rolling other. Right? Then we go with rupees 1,000 for 100 million. Where is the guy? Tatyo Bindu Ramadak 100,000 into 100. So rupees 1,000 into 100. 100,000 kilaga. Rupees 1,000. Debenture value. Debentures redeemed at a premium. Effective interest rate 15%, coupon rate 12%. Transaction cost 60,000. Can you prepare the financial liability account for the 3-year period? Financial asset opposite. I show you the formula how to get the amount. You can apply. Right now, this is financial liability first activity I want you to attend. Right. Now earlier one, I first work out one activity, then the second one I ask you to work out. But this one I think you should be able to work out this. Now this is debenture issued. Right. It's a financial liability. Financial liability at amortized cost. So initially when the debentures are issued, so I'll take it in rupees 1,000 because it has large value. 100,000, that is 100 into 1,000, right? 100,000 cash we receive. That we credit cash, debit cash, credit financial liability account. We debenture issue කරලා දැන් අපිට සල්ලි හම්බ වෙනවා. Right? We are the issuer of the debenture now. Earlier we are the investor. Then we incur transaction cost. So transaction cost cash credit, debit financial liability account. Cash credit, debit financial liability. That means effectively we have received 99,940. අපි 1 million ගත්තට අපේ transaction cost එක ගිහිල්ලා තියෙනවා 60. Now you pay interest. එතකොට interest income එක ගන්න ඕන. interest ගෙවන එක අපි ගන්න ඕනේ. You pay interest. We have to pay 12% for 100,000. අපේ transaction cost එක අදාළ නැහැ. අපි debenture issue කරා නම් 100,000 අපි ඒකට 12% ගෙවන්න. Right? Like we take the investment income. When you are the issuer, you have to pay interest 12% for 100,000. That is 12,000. 12,000. Now, when you are taking the interest income to P&L, there we can take 100,000 minus 16 to 15%. පළවෙනි දවසේ අපිට 100,000 spend වුණා. හැබැයි අපිට ලැබුණා 60,000 spend. net බැලුවොත් අපිට ලැබිලා තියෙන්නේ 99,940 for that 15%. So then you can balance this account. This carried forward balance is the amortized cost. 102,931 is the amortized. That becomes the opening balance of the year 2. So the interest payment same, 12,000. But second year interest expense also we can take now 15% to the opening balance. So 102,931 into 15%. So now carried forward balance is 106,371. It becomes the opening balance of year 3. So the third year interest should be 106,371 into 15%. So you can find the amortized cost. Now that we will redeem. So you can settle it by cash. अब cash credit कर लो, इतना debit कर रहा हूँ, तो मैं कभी settle कर. So interest expense over the 3-year period, we can have 14,991, 15,440, 15,956. There's a financial liability at amortized cost. And show this liability. First year we can record it as a current, non-current liability. But in the second year, can record it as a current liability because the now we are going to settle this within the third year, end of the third. Right. The examination context එකේදී ඔයාලට තොරතුරු වල බලන්න ඕනේ whether the debenture issue or debenture investment. දැන් debenture issue එකක් තියෙද්දි investment එකක් විදිහට count කරොත් ඒක සම්පූර්ණ ලකුණු නැහැ. Right. Totally wrong. Sometimes students do that mistake. ඒතර investment එකක් විදිහට මේක financial asset කියලා මේ පැත්ත debit කරලා මේ විදිහට ඔක්කොම accounts හදාගෙන යනවා. Right. Totally wrong because you have not read the question. ගානේ තියෙන්න පුළුවන්. shares වල invest කරනවා debenture issue කරන එකක්ද? Right. Is it clear? So you can attempt the second activity. This is number 7. We have number 8. Right. Make number 8. Issued 200,000 rupees, 12% debentures. Redeemed at a discount. So effective interest rate 10%, transaction cost 150,000. Right? Make up rupees 1,000 වලින් හදමු. එතකොට 200,000 කියලා අපිට දාන්න පුළුවන්. 200 million. Okay. Thank you. Right? So now 200,000 is the investment. So initially, 200,000 is the value that received by the company issuing debenture. Transaction cost 150 to credit cash and debit financial liability account. The interest paid 200,000 into 12%. Cash credit, financial liability debit. The interest expense 200,000 minus 150 to 10%. Effective interest rate. 19,985. So you get the carried forward balance. End of the first year, the amortized cost of financial liability 195,835. It becomes the opening balance of year 2. Year 2, the interest received. That won't change. Interest paid won't change. 200,000 අපි collect කරගත්තා. ඒකට 112ක් ගෙවන්න. But interest expense recognized based on opening balance. Opening balance into 10%. Effective interest. So the carried forward balance 191,493. They're paying the same interest 24,000. but the interest expense is 419 into 10%. You can find the amortized cost end of the third year. But you are not carried forward it, now we settle it by cash. The finance expense again opt out to name. The debenture liability. End of the first year, the amortized cost balance you can record as a non-current liability. Since it is a 3-year debenture, second year it becomes current. අවුරුදු 5ක වුණා නම් first year, second year, third year තුනේම එනවා non-current. හතරවෙනි අවුරුද්දේ current වෙනවා පස්වෙනි අවුරුද්දේ නැති වෙනවා. So when it is going to settle in the next year, that should be current. That's why it become current liability in the second year. This is how we should account for financial liability. Any question? The financial asset, financial liability. Basic financial instruments together, we make account for the factor. We have a batch representative class monitor someone. Yep, right? So have you already formed into groups? Right? Groups here in the class. 6. Including those joining online. Right? Okay, you can send that Excel sheets. I will create a link in the LM. Right? So you can upload the group list. So then I will allocate the group assignment topic. Right? So each group will get a standard. Right? Standard එකක් තමයි මොකද ඉතින් right ඒ standard එක base කරලා presentation එකක් තියෙනවා right so first you have to get ready for the presentation count for 20 marks. And normally group presentation, even though it's a group presentation, you are mainly evaluated based on individual performance. Right? So it can't be a free ride. And if the group right? Presentation, we have to present as a group. And each and every presenter should be responsible for the content accuracy and the formatting of the slides that you present. And your presentation, right? Your present. Individual mark calculation එකක් තියෙනවා මේ 20 වලින් 15% individual 5 as a whole group right එහෙනම් තමයි ලකුණු 20 හැදෙන්නේ. So since it is standard you better refer to the original standard right. Sometimes what happens try to take some slides or some material from the internet. It is okay, but you should ensure you are using the correct standard. අර නිකන් ස්ටෑන්ඩඩ් එක ඉන්ටර්නෙට් එකේ සර්ච් කරනවා. right? So ඒ එක latest එක නෙමෙයි වෙන්නේ. ඒකට වෙන්නේ සමහර වැරදි content presentation. Right? That will affect to the marks. For the standards, so you should be able to refer to the accounting standard වන්න පුළුවන්. Sri Lanka Accounting and Auditing Standard Committee SLAA SC කියලා search කරලා බලන්න එනවා මේ site එක. Right? SLAA SC. Google search කරපුවම you will get to the Lanka Accounting Standard Auditing Committee. There you find the accounting standard. auditing standards. You know, we are accounting standards. You know, accounting standards වල view more කියලා එකක් තියෙනවා. Right. මේකේ දැන් accounting standards 2022 වෙනකන් ටික මෙන්න මේ standard bound volume කියන එක ඇතුලේ තියෙන්නේ. හැබැයි latest update එක ඒගොල්ලෝ දැම්ම 2023. ඒක මේක වෙනමම තියෙන. ඒ standards වලට ගියාම accounting standards කියන එකට ගියාම මේකේ තියෙන ශ්‍රී ලංකා accounting standards, public sector accounting standards, SME standard ඔක්කොම මේකේ තියෙනවා ශ්‍රී ලංකා accounting standard bound volume 2023 latest එක. ඒකට යනවා. That is the latest. That is what happened. මේකේ conceptual framework SLFRS ටික තියෙනවා. LKS ටික තියෙනවා. මේක දැන් බලක syllabus එකට අනුව කාට හරි allocate වුණා කියලා මේ standards වලින් borrowing cost LKS 23. Just click on LKS 23 borrowing cost. You get the standard if you download it. And your presentation you have to based on the standard. But you have to explain with some calculations, examples, right? And all the calculations, examples, you have to include answer also to the slide. So body time එක ගන්න තියෙන නිසා පාට බෝඩ් එකේ වගේ උත්තරේ ඉවෙලේ හදන්න බෑ. right? ඒකේ කලින් හදලා එක ස්ලයිඩ් එකට දාලා ගන්න. right? ඉතින් අපිට එක්කෙනෙක්ට සාමාන්‍යයෙන් 30යි ඉන්නේ. 33 students. 5 minutes වගේ allocate කරන්න. 4 to 5 minutes. The group එකේ 6 දෙනෙක් ඉන්නවනම් right ආසන්න වශයෙන් විනාඩි 20ත් 25ත් අතර කාලයක් group presentation එකට allocate. You should ensure that you utilize the time. මොකද වැඩිපුර ගන්න දෙන්නේ නැහැ මොන අතර කරනවා මොකද right. And each and everyone should take part of the presentation. Right? And one presenter can present only one time. Mark it not there. And in the presentation slide also I am getting the order. Right? Again, slide එකේ දාන්න ඕනේ. Slide number this to this. පළවෙනිය. Right? දෙවෙනිය තුන්වෙනිය විදිහට එයා present කරන slides ටික මම ගන්නවා අර PowerPoint එකේම. Right? Second slide I will give you the format. And give you the instruction note next during the next lecture. So you can send me. I will create the link in the LMS. LMS එකේ මම අදම link එක දානවා. ඒකට පුළුවන් ඒක upload කරන්න. Right? So then I will allocate the topic. Group list එක සාමාන්‍යයෙන් එන්න ඕනේ. ඔයාලා දන්නවා name as per attendance sheet. And the registration number, right? May upload කරන එකේ නම් කෙටි නමක් තිබුණත් ප්‍රශ්නයක් නැහැ. හැබැයි presentation එක කරන දවසේ because you are allocating individual marks. Should slide එකේ අනිවාර්යයෙන් තියෙන්න ඕනේ name with initial in line with this. මේක දැන් ඔයගොල්ලෝ හදලා තියෙන group එකේ සමාන තුන නම් දෙකයි තියෙන්නේ කියලා. You can go ahead with that. Because this is just for the allocation of the topic. Right? Should ensure all the members are included in some group. So the next week, I will upload the topics. The book standard read right? So this is the first session. So we will have the fourth lecture presentation right in January 28. Fourth evening. So මුලතරන් ඉක්මනට දැන් හෙට වෙද්දි දැම්මොත් හෙට හවස් වෙද්දි මම ස්ටෑන්ඩඩ් එක දානවා. ස්ටෑන්ඩඩ් එකක් නිසා වෙනම තොරතුරු හොයන්න ලොකු දෙයක් නැහැ. right? Can refer the standard. ඊට අමතරව ඔයාලට ඉන්ටර්නෙට් එකකින් ගන්න පුළුවන් දේවල්. right? But presentation should not be the just copy the text and present fill the slides. right? මම ඒ ගයිඩ්ලයින් එක දෙන්න සාමාන්‍ය presentation එකේ slide එක වලදී මම බලාපොරොත්තු වෙන සාමාන්‍ය ක්‍රමයක් තියෙනවා. If you use the lesser amount of text, like you can use diagrams, charts, tables, right? ඒ වගේ දේවල් වලින් පුළුවන් තරම් summarize form එකේ තමයි presentation එක slides එක. එක presenter කෙනෙක්ට slide number of slides you can decide. විනාඩි 5ක් කරන ඉඳ අඩු ගන්න ස්ලයිඩ් 3ක් 4ක් තිබුණාට කමක් නැහැ right මේ සාමාන්‍ය ස්ලයිඩ් 25 එන්න පුළුවන් right that's up to you but I recommend everyone at least use 2-3 slides නැත්නම් සමහර කෙනෙක් එක ස්ලයිඩ් එකක් දාගෙන ඒ කියන්නේ සමරයිස් කරනකොම too much summarize heading එක විතරයි තියෙන්නේ ඉතින් ටික ඔක්කොම තමන් කියන්න ගියොත් you can't keep the audience right so you have to summarize means that you need not to fill with the text මම share කරන next week එකේ ප්‍රශ්න කරපු presentations වල right කරලා තියෙන හොඳ දේවල් සහ නරක දේවල්. ඒතර ඔයගලට idea එකක් ගන්න පුළුවන් slides preparation එක. Right. So with that you can have the lunch break, right? So we'll continue the discussion. Then make it out financial instrument, right? So we'll continue that part. Then the second material, second standard also we can start in the next week. ඊළඟ අපි මේක ඉතිරි ටික continue කරනවා. බොහෝ වෙලාවට ඉතින් මේකට next week කියන 2 hours වගේ යයි. Right? Break එක වෙනකන් after that we'll go to the next stand. Okay. You can have the lunch break.